Hello, ladies and gentlemen, and welcome to the newest edition of Levelytics on Video. I am your host, Jordan, and for those of you who do not know me as Jordan, I also go by Permabull Nino in the Twitter sphere. For those of you that are our subscribers, welcome back. It is good to have you back, and I hope you guys are strapped in, ready for another good, long discussion on the crypto markets. For those of you who are new to the channel, welcome. And if you guys have any feedback, if you're new or old to the channel, feel free to drop them in the comments or shoot me a message on Twitter at PermableNino. And yeah, guys, a lot to talk about in the market, so let's just get into it, right? So as always, we're kind of starting off in the I always want to start off with the price chart, right? Because at the end of the day, all this data can, you can take all these readings or whatever you want from the data, but it doesn't really mean much if it doesn't show up on the price chart, right? And the whole point of the work that I do is that I want to make sure that not only are we doing analysis of the market, but that we are also ending up on the scoreboard, right? The whole point of doing research and looking into all this data and looking at price action, spending all this time focused on the market is to eventually make some money, right? So let's get into it. And this, the chart is basically the same. It's been like this for months. So some of you guys are probably pretty familiar with this build up at this point for what we have going on here, right? But you can see with price action since late April, we are just hovering in the bear's first wall. And, this area between 75K basically to 80K is like the danger zone. This is kind of like the decisive endpoint for what is going to go on in price action. And, in today's article, I kind of focused on like a handful of ways that you can focus on identifying trends, right? Like, because at the high level, you want to minimize the amount of effort that you have to put into making decisions, right? The whole point of doing all of this is that you want to come up with frameworks that make your life easier, right? And I've discussed this before with you guys that you want to also eliminate decision fatigue, right? You don't want to have to constantly be making decisions because at some point you are going to get worn out and you're going to start making some bad decisions. That is the entire point of me building my momentum trading system, right? That is the entire point of these red candles and blue candles, right? Sell red candles, buy blue. As you can see right now, we have red candles on the price chart, which tells you that for the time being, we have bearish momentum and purely just from a price perspective, right? And this makes sense, right? There's just not much to be excited about here since, for almost a month now, we've just been hovering in the danger zone. So, right, there's nothing quite decisive. And the way I've designed my trading system is that it is when in doubt, right? And when I say when in doubt, I mean if the price is going sideways, lean bearish, right? That means you should assume the worst. And I think in crypto markets, that makes a lot of sense. Obviously, with Bitcoin, it's probably the only asset that has a positive trajectory over time, right? But the rest of crypto assets, you really should maintain that mindset, right? You should assume that if the price is going sideways, it's going to break down. And that's kind of what I do, right? And maybe it'd be a good time for me to disclose that none of this is financial advice, obviously. This is just how I view markets. This is how I've experienced markets over time. And especially since I've been focused on actively managing my money in the crypto markets, which I said has been, I've been in crypto since 2016, but I've only really been actively trading the markets for about 4 years at this point. So, yeah, so that's exactly what's going on here, right? We're just hovering in this middle zone, right? And I think it's pretty obvious at this point. Maybe in other videos I haven't really said it, right? But there's two big gaps in this price chart, right? We're hanging out in the bear's first wall, and there's a big gap down here, down to value, low 60s, and then near 100K, 95K to 100K is the next gap. So whichever way price breaks, I assume it's going to be violent, right? That makes a ton of sense. And I think if you really think about it from a psychological perspective, you really could just start to think, right, if price breaks out, these are the late bears getting just steamrolled. They're just cooked. And these are people that, maybe started selling, down here, maybe even below 100K. It's like all the people that sold from 100K down to 60K, right? This is when you start to panic, right? If you don't sell the peak up top, right? Let's just zoom out for a second. If you don't sell the peak up top up here and price starts to revisit the areas you sold at, I think people start to get a little bit nervous, right? And that's when people start to second guess whether or not they should be buying back their crypto or Bitcoin, right? So that's what happens when you get a blast through this zone. And I've said this before, I think the move through here is going to be explosive. The move down here would be explosive. And the reason why it would be explosive down here is because I think it would be a lot of people, I kind of discussed like my thinking on it from a personal perspective is that if price breaks down here, you also have a bunch of assets and other asset classes that are performing pretty well. So I think people would really puke and capitulate on crypto. They'd be like, forget it. I'm kind of done with this. And I think this breakdown would be significant enough, in my opinion, that you really are probably going to need another 90 days before I would even consider the price recovering and there being any sort of strong momentum. So I think a breakdown, if you got to move back down into the 60s, I think at that point you just assume it's going to be a very long bear market and that people are just super checked out on crypto. Right. So I think that's like the mindset between these two camps, right? The bears up here start to capitulate because they probably sold all the way down, or there's people that were late shorting down here that are finally having, getting stopped out or liquidated on the move up. Some forced buying goes on here, right? Or you get the breakdown here where people just finally throw in the towel for good. And they're like, we're cooked. The rest of the global financial markets are just ripping. So let's just sell, move on, and revisit this in 3 to 6 months at this point. So that's where my head's at. That's where I think other people's heads are at. And always have to consider the psychology of the total marketplace, right? So I think that's what we need to consider. And for the time being, like I said, red candles. The way my trading system is designed is when in doubt. Right? Like I said, and when I say when in doubt, I mean, if the price is going sideways, be bearish. That's kind of what the trading system is built for. So that's exactly why the candles are printing red right now, right? We've had a month of going sideways in the danger zone. Okay, so that's it for the price chart. Now let's get into all the data. Okay. So you guys have seen this chart before, but this chart, this green line here, it shows you the volume being absorbed into open interest. And right, the high value signal that a lot of volume is getting absorbed into open interest. And what does that really mean, right? What does that mean that a lot of volume is getting absorbed into open interest? It means that people are getting levered long or levered short, and that they are holding onto their positions, right? It means they're not closing them. They're not closing them very frequently, and that means a lot of money. Not the majority, but like on a relative basis, right? Because this is a Z-score calculation, right? So it's all relative. It's not an absolute calculation. But it signals to you that there are a relatively large amount of market participants that are willing to hold on to their levered positions, right? And what does that signal to you from a psychological perspective, right? If people are willing to hold on to their positions, it means they have some sort of conviction one way or the other, right? So, for example, right now, the blue candles show you areas where this is the values are greater than 1.5, right? And when values are greater than 1.5, I consider that a significant amount of confidence or conviction / willingness to hold on to their perpetual swap positioning, right? Right. So that's exactly what the blue candles are. Blue candles are greater than 1.5. All the red candles are less than 1.5, right? And obviously the red candle signal, there's not much confidence and people are closing their positioning quickly. And as you can see as well, the red candles are basically usually periods that you really don't want to be involved in the market. It kind of signals to you that people are risk off, they're low conviction, there's not much risk taking going on, right? And you kind of are just better off being sidelined, not being too active in markets. And, just so you guys can have a better view, right? It happened here on the way down from October to December 2025, and then it happened on this last leg down, right? It broke down. And one other thing to note about the blue candles and the high volume absorption is that it can also be a bearish signal. And what I mean by bearish is that if price starts breaking down and then you start to see people losing confidence, right, by these values dropping, having lower percentages of volume going into open interest, right? That means people are closing out their positioning. That tells you, you'll start to get the red candles and it's like, okay, it's time to get out of the market. It is time to be nervous. And that's usually when the market rugs, right? Because you had all this buildup in confidence and people willing to hold on to their positioning. And then eventually it just rugs after that, right? Obviously, leverage buildups are reasons to be nervous in the market. And this is kind of also why, like I told you, there's violence between, if we get a breakdown to like 65K or low 60s, I think this buildup, this level of confidence, when this breaks down, after it's been going on for this long since March 30th, March 31st. So this has been going on for 2 months, right? This has just been people showing high conviction, holding on to positioning for 2 months. If these people start to capitulate, that turns into violence to the downside. That's bad, right? Or you can view it the other way, right? For every single long trade, there's also a person who has to take the other side of that trade, right? There's some sort of short position on the other side that can get steamrolled if you move price up, right, from 80K all the way up to 95 to 100K, right? You can get these values where, because people are holding on to it and there's a move of violence, you might get a positioning closing out and that might cause this metric to go down. And what does that tell you when that metric goes down at that point? If you want my opinion, it would signal to me that shorts got steamrolled, right? But that's not always the case, right? You can have these moves up and these values still climb. So for example, you had it here going back to the presidential election in 2024, right? You had all this buildup, the prices, like you start getting blue values, right? Signaling that a lot of volume is going into open interest. People are gaining confidence in the market and they're ready to be long or short, right? There's people willing to take risk going into the election, which makes a ton of sense, right? When you think about such a large catalyst, back then Trump was kind of known as the crypto guy before he started just scamming his way through his presidency with, the meme coins and, world liberty and all this crap, right? But, back then people were like, oh, he's going to be, the crypto Don basically, right? And he is going to bring us back to the promised land for crypto with good regulation and blah, 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 right? So you see that values start getting elevated going into the election, right? Starting in mid-September, right? And after the election, the value still went higher, right? You ended up having actually a lot more volume getting absorbed into open interest. So people risked on even more. And as we know, and we've talked about this in other articles and videos, is that people did risk on. This was like really not shorts getting liquidated. This is people levering long and getting super, super long going into the election and after the election, because there was a lot of euphoria. And this is kind of how you mark the top, right? We've talked about this before too. I think this was the crypto market top. This was it. And then after this, you got the red candles, a lot of deleveraging going on, people losing confidence in the market. And it was pretty scattered after this. You got these a couple one-off pumps here, right? You got a couple good moves here. Where you could have gotten in and out of positions, and then it all basically just ended on October 11th, October 10th, 2025, right? So like I said, not to beat a dead horse here, but the big gap from 80K to 100K and the big gap from 80K down to like 60K is what could cause this potential buildup to unwind, right? And there's no guarantee that it'll unwind, but I assume if price rugged, this value would go down with it. If it goes up, I'm not sure what happens. It either goes down a little bit because shorts are going to get liquidated, people are closing out their positioning, or people are just going to lever long into it. I really don't know how the market is going to react to upside, but it's just something to pay attention to and something to think about, and reasons why, like I said in the article, that I want you guys to be prepared for violence. For the worst case scenario. Like I said before, it's no secret that my bias is definitely bullish, and I think this market is ready to make a move of its own. Does that mean that Bitcoin's going to new all-time highs? I'm not sure, but I think there should be a substantial move across the crypto landscape and for prices to catch up with the rest of global markets. Okay, let's move on. So this chart shows the average funding rate across all altcoins on Bybit, right? So this is the red metric down here, right? And you can see the black horizontal line, that's the 0. So you can see on the price chart, if you don't really know, it's hard for you to tell. Red candles for BTC price tell you that funding is negative for altcoins, and blue candles tell you that funding is positive. And the trend is pretty self-explanatory at this point. You can see during the bull trend, after the starting in October 2023, when the BTC ETFs got approved, it is basically nothing but a positive skew for funding for altcoins. Even during this long period of 2024, where price went sideways from March 2024 up until October 2024, well, that's 6 months straight of sideways price action, you can see that the bent is still mostly positive funding, right? That is something to keep in mind. Despite the fact that altcoins were actually getting clobbered in this period, they didn't perform particularly well. BTC was going sideways. People were going a little bit crazy. I remember this because I was trading it, not trading it particularly well either. And this was a period of driving people nuts. But despite that, right, you still had a positive, bullish bent for funding rates. That means that people still were risk on. People had not exited the market, and people still had positive expectations for future price action. And that's exactly what funding rates indicate to me. If funding rates are positive, I think people have a positive expectation of what's going to happen in the future for altcoins. And that's exactly what you got, right? And you got it all the way through the US presidential election, right? And then after, there's a big liquidation event in February 2025, which I think is pretty near inauguration when Trump went into office, which was kind of like big sell the news. At that point, Trump's in office. There's no more speculating on what he's going to do anymore. He's about to go into action. I was really wrong about this period too. I really thought it was going to be a bullish period, but keep in mind, I my analytical skills, my understanding of how to go about executing and managing my own money was not as strong as I think it is now. But yeah, I was really wrong. Sometimes you do not get it right, and you get steamrolled here. And this is an easy signal. And like I said, this whole article is about just doing the basic shit right. Right? Because if you get the macro right, it's much easier to get the micro right, right? So that's exactly what happened here, right? You get negative funding rates. And after this, you kind of got scattered funding the rest of the way. You had a little bit of buildup here from July 2025 till October 2025, where you had a lot of positive funding rates. Not that they were significantly elevated, right? You can see that these are not very high elevated values compared to the U.S. presidential election or the ETF run-up, right? These were huge, right? This is a lot of positive funding. And a lot of risk on activity. This was quiet. This was what's so weird about this whole liquidation event that occurred, is that there was just so much leverage built up, but nobody really saw it coming because it wasn't obvious in the funding rates. It was just like, out of nowhere, boom, you get this nasty candle down where you get negative funding rates. And ever since October 10th, it has basically been negative funding. And what is significant about what's going on now, right? This is what we go about through this metric, talk about the history, how it all works. And now it's how does this relate to what's going on in the market right now? And as you can see, we can zoom in a little bit. Let's do this really quick. Sorry. I think we're a little too zoomed in. Right? So this is since March 8th, right? And we're finally starting to get some blueprints. God, every time I say blueprint, I just want to laugh because it, obviously a blueprint for like a house. But you can see that also funding is finally starting to get much more elevated, right? We're back near zero, near flat, and we're kind of just bouncing in and out of it as price goes sideways. You can see as we peaked our head above 80K up to 82K, we got some, positive funding. Unfortunately, like we talked about in the other video that we did recently, is that the market was very levered up on a relative basis over like a 30 day to 14-day basis, where people got really levered up in the short term. And this is what happened. People got stung and then price dipped, right? And this is what happened here. This is where you got this deeper negative funding print on May 23rd, right? So BTC was kind of fighting for its life on May 23rd, which is, a couple of days ago. But, you can see the skew is much more bullish now, right? Compared to what we had going on in the months leading up to this. So there is reason to believe that people are risking on a bit more in crypto markets, and people are much more willing to lever up. And, as I've said in the past, as I said in this video, I think that is a good indication for people willing to risk on. And then one extra thing, let's zoom back out one more time. Sorry, let me just do this. The main takeaway, though, from all of this, right, is that look how nasty this October 11th, 2025 funding rate print is, right? This is how bad just the wipeout that occurred in October was. Keep that in mind. And if you think about like the perps markets were effectively broken after that, and people keep saying, oh, October 10th broke crypto. If that's the case, right, you would think that the next time you start getting semi-elevated funding or funding rates showing any signs of life, it would be very high signal. And I think that's what's going on here. You need to really consider that. It's like, oh, the market maybe is finally recovered. It took from October until the end of May 2026 for the market to finally be like, okay, we've licked our wounds enough. It is time to get back out there and start firing again. And I think that's the signal. This is the signal here, right? This was a devastating event. It took a long time, lots of trauma, lots of therapy for crypto market participants in general, as the rest of global finance just went vertical, right? But I think we're here. I think that there's signs that crypto is coming out of hibernation, that people are ready to start firing again. Okay, so that's like the takeaway from the funding rates. Okay, so let's do this. Hold on one second. Let me zoom in a little bit better. Okay, so this is the altcoins 90-day performance, which is the red line, right? Versus purple, which is the tech 90-day average. This is basically the Mag 7. Yeah, this is pretty much Mag 7. So it's pretty simple, right? Whenever they're both positive, you want to own the one that's outperforming, right? If they're both negative, which occurred, down here April 2025, you don't really want to own either. Obviously, you don't want to own any assets that are going down. That's kind of the general rule of thumb. The reason why I picked tech is because crypto is usually, when people compare crypto performance, they're always comparing it to the performance of tech, right? So it's the simple logic. There's nothing too cute about it, and I kept it simple on this. But basically, the real true crypto rallies are when altcoins are actually outperforming alternative assets, right? Because the alternative to owning BTC is altcoins or going into other asset classes, right? And it's cool to own alts when they're performing well. Like for example, let's just do summer 2025, right? There's this period where alts kind of recovered a little bit. They even went up to 41% up over a 90-day span in September 2025, right? But the reality is that they were still basically underperforming tech, or they're performing in line with tech. On a risk-adjusted basis, you already know that that's a bad trade. You're still better off owning tech. This doesn't even adjust for volatility either. And everybody knows altcoins are more volatile than large cap tech stocks. At least at this point in time, they definitely were, right? So that's something to keep in mind too. So this is just the raw comparison of 90-day returns, right? So you don't even want to own alts here. You want to own tech here. And for this entire period, ever since October 10th, you can see the red candles. You want to own tech. You do not want to own crypto, right? And this is exactly what happened, all the way. And what's funny is that this got you out before you even had the nasty candles. Like, oh, this asset class isn't even worth owning. You can see all like October 9th, you had a decisive move where crypto was already underperforming tech. So, the real pumps are the ones you want to pay attention to here, right? You can see in going into the election, real pump. You can see starting November, like November 1st, you basically had crypto starting to outperform tech. This is a real pump. This is where you are getting alpha and outperformance, right? This is exactly what you want to see. This is the time you want to own crypto. That's when you want to be long. It's the same thing going in after the ETF announcements, right? This was a pretty beautiful setup too, where you just clean, never revisited, and just ran off without it, right? And you actually got it a little bit coming off the bottom in early 2023, right, in February. But this kind of died off pretty quick, right? Keep in mind for like most of 2023 going into the BTC ETF, it's all red here. You do not want to own crypto. You were better off owning tech, right? And keep in mind, tech did pretty well over this period. It maintained a solid 30 to 40% 90-day performance over April to September, October. That's 6 months. That's strong performance from tech. So you did not want to own crypto here. So the red candles were giving you really good signal. And this is probably the simplest, yet most effective tool that you can use in this entire toolkit, for this article, right? To just follow returns. Like I said, the most important thing that matters is price action, right? You can be like, oh, funding's positive or open interest is high, blah, 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 or whatever you want to look at. But if price is not doing what you think it should be doing, you need to go back to the drawing board, right? So these are simple metrics when you just compare cross asset class, like what's outperforming. And these are both BTC investment alternatives. So yeah, you had it here, October 2023, and then you also had it November 2024, December 2024, after the US presidential election. And basically since then, there was no reason to own crypto. You could have just owned tech the entire time and actually had a much better and easier time during that process, right? You have these periods where you can see that they're both kind of moving in lockstep a little bit. You kind of get it down here in March 2026, right? And they're both recovered now. They're both in the positive. So they're both technically worth owning, but for the time being, I think you want to own altcoins over tech, right? This looks good. And usually when this happens, when altcoin outperformance kicks in December 5th, 2024, let's see, December 5th. Up 142% versus 26%, and then at the highs here, let's just see, January 11, 168%. Yeah, when these moments kick in, this is when you need to start firing. Crypto does it all in one go. It pumps really fucking hard for very short periods of time, and then it bleeds out for a very long time. These are the periods when you need to start firing. At a minimum, you need to be paying attention to crypto here. This is when you need to start taking your chances and seeing if you're going to make a few extra shekels, right? It's all about owning the fastest horse. And, for me, I've admittedly even missed a chunk of this equities AI move. I've had way too much money sitting in crypto. I'm one of those people that got completely sidelined on the AI move in equities. And, I own that. So, but, you need to learn your lessons along the way. This is exactly what's going on with crypto and some of the large cap tech stocks, right? So there's action possibly to be had here. And you can already see it in the price action. Some of the stuff that the Levelytics book owns, which is Hype, Near, and Zcash, right? Some of these assets are ripping. And I think there's a lot of people thinking, there's only going to be a few winners that are going to go really hard. I am not of that opinion. And I'm going to show you why actually really quick. Hold on one second. this is the Dude Terminal favorites page, right? So if you have an account and you log in, you can save charts to your favorites, and you click on your username, my favorites, right? And this is where all the charts were built. These were all built using the Dude Terminal AI terminal that I'm building, right? So I can cross compare my metrics. I can refresh the data, right? You can do all these different things. So I'm really excited about this. And all these charts from today were built using the Dude Terminal AI as well. So yeah, this is like a little peek at the save charts. I'm not going to show you the terminal quite yet. There'll be a point in time where I think that makes a lot of sense. But for the time being, it's still a work in progress. I'm really excited about it. It is going to be, it's already been super helpful for me, but yeah, I can't even remember exactly what I was going to show you guys. I was comparing these. I can't remember, dude. Fook. Oh, well, I'm moving on. Sorry, guys. Okay, so there are likely bears amongst us, right? Wondering, was there even capitulation? Was there enough blood? Is the bottom in? And there is never any way to know that answer for sure, right? You never, for me, I'm definitely, when it comes to markets now, not that I would say I'm not confident, but I would say that being an absolutist or arrogant usually is when you get steamrolled, right? You need to always keep your wits about you, and you need to just wait for data to build up. And I've said this before, I think, as well in videos, that sometimes the best setups just show up in your face, and they're so obvious when they finally happen. I'll admit, I think this is one of those periods where crypto is one of the best setups we've had in a very long time, and it's very obvious. But, like I said, despite that, I always want to tell people that I never know for sure, right? You never know for sure. Always need to keep your wits about you, right? But, okay, so that's the whole point, is that I don't know for a fact if 60K was the bottom for crypto. I have no clue, right? Other people can tell you with a higher degree of confidence. It's not something that I obsess over, right? I really just care about getting long and selling at the right times, right? And I think now is a very good time to get long. So the price chart, right? Blue candles are when 90-day returns for altcoins are positive, and then red is when they're negative, right? And then this purple line shows you the consecutive days in a row that 90-day returns are negative, right? If this line is going downwards and it's negative, these are negative returns. So this bottomed on May 1st at 204 days in a row of negative 90-day returns. And then positive values, you can get up to, on the ETF run up, you had 215 days of nonstop 90-day returns being positive, right? So there are ways, though, you can identify that if a trend has really, really run its course, right? And because this red line, I need to tell you guys what this is. This shows you the percentage of perp pairs on Bybit that have an oversold RSI rating. Right, so this up here, this high value on February 5th was 70% of assets had an oversold RSI value. And what you get with this combination of long duration, right, on the purple line, and then high percentage of assets with low RSI prints tells you lots of assets are oversold, and the trend's been going on for a long time. This is the best combination that I could think of in terms of, is the bottom in? Is it even worth discussing the fact that we could possibly be in a bull trend? This is kind of, I added this chart as the last thing in the article because the last analytical chart outside of the portfolio section in the article, just to let people know, like, for those who are still in doubt, I think there is a convincing argument that this was the bottom, that for the time being at a minimum, right? Maybe we get some big bounce up. Let's just say it bounces back up to 120K, then maybe it goes back down to, I don't know, 50K, 40K. I don't really know. But I think for the time being, this was plenty, right? You had this big capitulation where a lot of assets were oversold on February 5th, long duration, right? You have other periods, and this metric can work different ways, right? Let me show you other examples, right? You had this long duration uptrend. Boom. You had this large prints right after, right? This flipped at the end of May, and then these printed like 2 to 3 weeks later. This tells you people are getting liquidated and steamrolled. This is the first major sell-off, right? You would need to wait a little bit longer before you start considering, the bottom might be in. And then once again, right, August 5th. This ended at the end of May, August 5th. That's June, July. Yeah, it's like 2.5 months basically, right? This is when you start to pay more attention, right? When you start getting like 60 plus days of downtrend, then you get a major sell-off. That's when it's like, okay, this has been going on for a while. This is a pukey sell-off near the end, possibly of the trend, right? So, for example, February 5th, right? Big print, February 5th, 120 days in a row. That is very late. I mean, that is, that's 4 months of downwards price action. That's puking. That's late bear trend puking at that point. And you get it over and over again, right? You can see large print down here. This was after, Liberation Day, April 2025. We were, this happened April 6th. 60 days in a row, right? If you get to the 60-day mark and you start getting these large, pukey looking prints for the percentage of assets with a low RSI reading, that's it. That's the time where you start considering, maybe the bottom is in, maybe it is time to start paying attention again. And I put that in the chart in the article. I just said, it doesn't mean anything decisively. It just means it's time to pay attention. Because, as a trend trader too, right? If I think the bottom is in, that doesn't mean I'm buying here. That means I'm starting to pay attention again. Right? Because, as far as I'm concerned, especially because, I only do long only, I don't trade perps, I'm only doing spot and long, is that, when you start getting these negative return profiles, I'm not even interested, and sometimes I need to remind myself that, sometimes I'm like, oh, I'm still trying to trade and not letting go of the fact that the bull trend is over. No, you need to let it go. Once you start getting these negative trending prints, it's time to get out. However, you start paying attention again when you start getting these large oversold prints across a lot of assets, right? These are good examples of what could happen. Here is another example. This is actually a really good one going into the BTC ETF announcement. So August 16th, 2023, you got a very large print. Where's August 16th? Yeah, it's right here after the dump. Oh, hold on 1 second. My battery's running low. That would have been bad if the the recording had gone out in the middle of me talking about this. But yeah, going back to August 2023, right? You had a big dump in price and you had a lot of violence here, right? August 16th, you had a lot of assets printing an oversold reading. And August 16th was 114 days into negative, downwards price action for altcoins, right? That's a long duration. It's like I said, it's 3 to 4 months of it's like 4 months basically of downwards price action. So, at that point, when you start getting these prints late into a bear trend, it's like, okay, it's time to start paying attention. And again, things are going to start getting juicy. That is like a late capitulation sell-off, right? That's the time to start paying attention. Okay. And yeah, so that is my argument though for thinking that the February bottom was it, right? And like I said, if you go look at the percentage exposure of the Levelytics book, February, right? February, this line shows you the percentage of the Levelytics portfolio that was in cash. 85% was in cash at this period, right? Time to pay attention, right? That's the time to pay attention. I didn't start deploying cash until the end of April, early May. As you can see, as the percentage cash allocation goes down, right? And now it's down to 20%. So that is the, 2 to 3 months, 2 to 3 months of waiting. You pay attention here, 2 to 3 months, and that's the system, right? Because I also use 90-day returns as one of my key things that I watch to decide if I want to get back into crypto markets or not, right? And yeah, so that's how it goes. So that is my argument for the bottom being in. Like I said, long duration trend, capitulatory print, right? Big sell-off. So that was how it happened. This is where you start paying attention again. 90-day returns start flipping positive. That's one of my conditions I need to pay attention to. Doesn't mean I go max long. Obviously, I consider a lot of other things too, right? Okay, so let's get into the portfolio section though. So the portfolio has got 20% BTC, 25% HYPE, 5% virtual, 12% near, 17% Zcash, and then like 20% US dollars, right? These have been the hot coins in crypto. And, like I said, I think that these are the leaders. I do not think that they're going to be the only ones that are running. Virtual hasn't really moved yet. And the reason why I own Virtual is I can show you this. Hold on 1 second. Look at this chart. I mean, this thing is coiled. Hold on 1 second. 3-day. Let's make it 3-day. Look at this. This thing's coiled. I mean, since basically November 2024, this is just absolutely coiled. And whenever it's go time, and I think, like I said, I think these other assets like Zcash and whatnot printing, I think are early runners. Look how sideways this is. This thing has been sideways since February 2026. This has been 3 to 4 months of sideways. Virtual is a popular coin. It's very capable of violence. It's an AI coin. That's why I own this, right? And that's why I only own 5% of it though, because as you can see on the price chart, I'm waiting for a blueprint. Like I want my blueprint and then I'm going to buy more. And I will probably double the position size. Going back to it, where is it? Hold on one second. Yeah, I'll double it because it's 5% of the portfolio right now, right? I'll double that at a minimum, and I have BTC or USD I can deploy depending on if virtual is outperforming them or not, right? But yeah, there's other assets here. Like I said, I caught Zcash early. I caught that really early, and I just use the trading system right here, right? I keep it that simple. I don't really think there's much reason to overcomplicate it. And as you guys can tell, that's like kind of my system at this point. Is I look at the macro conditions, I decide if they're ripe for prices moving or printing, to the upside, and then I just wait for my blue trigger. Boom, go for it. And that's the combination that I do with these movies. Sorry, I had to step away for a second. My dog was slurping some water. I wasn't sure if she needed to go outside or not. But yeah, that's what I do. Keep it really simple, right? Look at the macro, decide if I really think that conditions are ripe for a crypto pump, which they're normally not. But I think my decision was that I think that they are. I've been talking about this for weeks or months, whatever you want to call it at this point. So when I get this blueprint on an asset like Zcash that has been trading like old school 2017 crypto, right? It's like it's time to buy. I fired on that. And then, hold on, Near is one that people have been talking about, and I'll show you the setup that I liked. It's pretty simple. It's been ripping. It's up 16% today. This setup here, I don't think I bought until it was like around here. But, this is a beautiful setup. If you really just want to keep it simple here, hold on a second. Oh, man, I forgot that, it's like, oh, crap. Right? Just a big consolidation right here, and you start getting blueprints. It's like, oh, there's positive momentum in the price action here. Boom, it goes and sends. Right? That's a reason to get in, and that's why I didn't hesitate, and that's how I caught the runner. And a lot of people have issues kind of determining whether or not how to find assets, right? And the easiest way that I could do it, and I could tell you guys, is go to snapshots on dudeterminal.com, right? Go to returns. Hold on one second. And you can go to anything. Hold on, but let's just do 1 month. Open the 1 month and just look at the 30-day returns. What are the best? What are the outperformers? Go look at their charts. Go identify, like I said, if there's consolidation, and then come up with your own system to get long or get out of the market, right? Sorry, guys, that was the last pause, hopefully, because I'm about to be close to wrapping up. But yeah, so that's what's been going on in the Levelytics portfolio. Let me see if there's anything else. And yeah, Levelytics is down 19% since inception. BTC is down 35%. And the alts that we've traded are down 60%. So, obviously negative returns, never good. But for a long-only crypto strategy, spot only, I feel pretty decent about it. And I think this is going to get back into the positive eventually. And let's do one last look at leverage in the market on a relative basis, because this is what caught me off guard before, right? So this is the 30-day average OI per perp bear Z score, right? So this shows the relative amount of leverage that's been added into the system over the past 30 days, and it's low. Values are low right now. This is what you like to see. It feels like things are gearing up for good news this week as it relates to Iran. I'm not really sure if we end up actually getting that, but that's something to pay attention to. Leverage is low. Risk feels relatively low in that regard. Right. And so, with that in mind, if you have low leverage, you have a bunch of altcoins heating up right now, positive funding, people willing to hold their positions. If you get BTC back up to the 82 range, I think it just goes for it. We'll see if we actually get it this week and if it actually happens. But I think that would be a really good opportunity. If it goes up here, people say top blasting is a very good strategy in crypto. And I tend to agree with them, right? Because they tend to drift downwards normally, altcoins at least. You're better off just buying strength, and if it doesn't fall through, just get out, right? But I think that there's a pretty good setup going into this week after this fake out. You can see, like I showed in the funding rate chart. Hold on one second. You can see that funding dipped down here, right? May 23rd, when price went down to below 75K. I think maybe even below that for a second. I'm not sure. But that was a moment where people got scared. People got scared, and price went down below 75K. On May 23rd, right? So after that little scare, you fake people out. Leverage is relatively low, right, on a monthly basis. So you get this move up here to 80K. I think that will be a really good opportunity for bulls to step on the gas and send this thing up to 100K. Does it happen this week? I hope so. And I guess we'll see what happens. But otherwise, I think the last thing, You know what? No, I think that's it for today. I think that's it, guys. But yeah, that's it for today. Hope you guys enjoyed the video. If you liked it, like it, please. I really appreciate any and all support. Please subscribe. Please share it with your friends. This is something I'm really trying my best to grow, but it only can get done with the support of people who actually really, truly love the content. So if you do truly love the content, please give it all the support you can. Thank you so much, guys. Have a great afternoon, evening, whenever you're watching it. And like I said, if you have questions, you know where to find me. Thank you so much. Bye.